Hello traders, Gary Wagner for Trending Markets, about 11 o'clock in Honolulu, 5 o'clock in New York. U.S. equities markets have closed roughly for an hour and closed moderately lower on the day. Dow Jones Industrial Average closing off roughly 50 points on the day to close above 17,000, but 17,081. And that, of course, took the market down about 0.33%, which, of course, would correspond on the Standard & Poor's down about 1% on the day, off about 18 points plus at 1992.50. If you recall from yesterday's show, we moved our stop just below 2,000. The reason being is I felt that we could see some weakness come into the market. We went long at 68. Even if you got out at 1998, you still had a positive trade of about 30 points at $250 a point. You're looking at $7,500 per contract in terms of profit, and I'm quite satisfied with that. So actively, we went long the SP 500 mini. We were stopped out with a very, very strong profit of approximately 30 points on the day, and are now flat in the market in regards to the Standard & Poor's 500. Crude oil was our secondary trade. Our stop was just below $47 per ounce. Now, we entered that trade at $48.47, getting out just below 47. So just for bookkeeping, we'll call it 47. So you saw a drawdown of about $1.50 per contract. Of course, 2,000 barrels per contract is about a $3,000 drawdown. So our net gain on the day, 4,500, 7,500 in the Standard & Poor's 500. And a negative 3,000 in crude oil still puts us quite positive on the day. But we are going into this afternoon's trading session flat with no active trade. Now, of course, we've been looking at the precious metals. We've been looking at the Standard & Poor's. And one of the big reasons we have seen gold and the precious metals complex on fire and really trading strongly higher is the fact that we have seen some underlying weakness in the US dollar. We're looking at a daily chart. This daily chart, of course, is in Japanese average format, so it is not showing us true high. It's showing us true highs and lows, but not true opens and closes because it is matching the open to the midpoint of the prior candle. But you can see the significant decline after hitting about 96.50 on the index. Absolute resistance in the market at that point. You can see how when we came up again and tested this, we had this rounded top here. We've really seen this market sell off pretty dramatically over the last week and a half in terms of trading. Now, I still believe that we could see some more underlying weakness in the US dollar, in that we really don't have major support come in till about 94, and you can see that by the virtue of this bottom here. You can also extend that and see these lows right in here at around 94. However, to get a real sense for the market, I've gone ahead and converted our daily Japanese average chart into a standard candlestick chart. And now on this daily chart, we are seeing true opens and closes. So we are still looking in terms of a level of support. You've got all of the real bodies that are just above 94. And in the case of the most recent history, you've got a low that touches near that, but no real bodies that come in, because the real bodies are up at about 94.50. So we could see a little bit of support if we just look at these bodies here as a potential level of support. But if we're looking for major support, that doesn't really come in till, as I said, about 94 on the dollar index. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another Trending Markets. Bye-bye.